All right, good evening. We're going to get started with tonight's United Policyholders Roadmap to Recovery Wildfire Q&A. We also have a special bonus. This evening, we're going to give a very brief primer on flood insurance, and you will understand why we're talking about flood insurance as we get into the program. A little bit about United Policyholders. Most of you are probably familiar with us, but just a reminder, we are a reputable, established not-for-profit. We're a national organization, a charity like the Red Cross or the Sierra Club. Our focus is on being a trusted information resource and a respected voice for insurance consumers in all 50 states. And we have a 30-year track record with a lot of expertise in improving disaster recovery, improving the flow of insurance funds, helping people navigate the challenges of getting back on your financial feet after a disaster. We are not for profit, not for sale. We're not here to get you to hire us or sell you anything. We're here to give you information so that you can be as effective as possible on your own behalf in the process, and so that you can find help from good sources when you need it. We're funded by donations and grants. We have a professional staff. We have lots of government and nonprofit partners, including the Colorado Division of Insurance, and our volunteers, which include people who've been through catastrophic losses, learned a lot, and are either started as a volunteer with us. In the case of Carrie Waite, who's with us tonight, she started as a volunteer, became one of our staff members. And then we have consumer-oriented professionals. We have one of them with us tonight, Scott DeLuise, who is a public adjuster, very consumer-oriented, lifetime Colorado resident. We also have Tracy Garceau with us from the Colorado Division of Insurance. And then we have two special guests, which I'll introduce in a minute. Our organization runs 3 programs. What we're bringing you tonight is mostly through our Roadmap to Recovery, but it also touches a little bit on the preparedness work that we do, helping people take the lessons that people have learned, often the hard way, after having a loss about their insurance. And then we package those lessons into as simple language as we can to help people who haven't been through it be in the best possible position to be resilient, and if they get hit by a disaster. So to take those lessons that other people learn the hard way and put them into action to properly insure their assets and be and have their property inventoried in advance. We're the publishers of this little yellow book, which hopefully you got your hands on early in the process. A little bit of quick fine print. We are here to give you general guidance, not legal advice. If you have a specific legal question, we recommend you consult an experienced attorney, and we do have a number of them listed in our Find Help directory at our website. We don't endorse or warrant any of the sponsors or speakers at our workshops, and we're not creating a professional client relationship with you. We just want to give you good information and help you. Again, our panel tonight, myself, Amy Bach, Carrie Waite, who you can see, Val Brown, who you can't see, but will be helping at the Q&A portion. Colorado Division of Insurance, Tracy Garceau, you already saw her. And then our special guests, Tracy Harrison and Peter Reinhardt, both of whom are mitigation specialists, meaning risk reduction specialists with FEMA. And then Scott, a dear friend of our organization. That's me. I've been an insurance consumer advocate since 1984, co-founded this organization in 1991, and have been for the last 30 years helping the organization publish and disseminate information that's going to be useful, develop partnerships, and basically keep our finger on the pulse of what is happening with all of you in the aftermath of a disaster and what kind of help you need, and then curating that help. So we're so happy when we connect with somebody like Tracy, because she works for the agency in Colorado that oversees insurance companies. So you, and Tracy, if you wanted, do you want to say a word or two about the complaint process?
So thank you, Amy, for having me again, United Policyholders, and welcome to everyone. Yeah, so we are a state agency here for you to help either on the phone to answer some questions or to process complaints. So if you have any questions on your claim, on your policy, give us a call and we can provide some guidance on the phone and or help you file a complaint, and we'll conduct an investigation. So we're here for you.
Thank you. And this is Scott. Scott, if you want to say a couple words.
Amy, thanks for inviting me again. I really enjoy doing these things because I care about, especially in Colorado, I'm a fifth generation Coloradan, and I care about what happens to all of our homeowners and business owners here. So I'll do everything I can to help. Feel free to give me a call to discuss any issues that you may have as well.
Thank you, Scott. And I know you're part of a professional trade association and that kind of prides itself on having people who are ethical and licensed, and so we may touch as we go through tonight on the people in the profession that are not part of the trade association, and that can cause some problems,
Right.
as we know. These are just some useful links, and for those of you who are dialed in tonight, we will make the whole slide deck available to you by email after tonight's program, and you will have these links, which hopefully you already know. These are the sites that the 2020 wildfire impacted counties have set up, and for you, and anytime you have questions about what you'll be allowed to do and not allowed to do, and what kind of deadlines you may need to meet, these are the websites that you can go to get those answers. From our organization, we have curated this help library for you, and that's a great place to go to also to get answers to your questions. So there is something called the fire flood sequence. Basically, as all of you know, from living in an area that's been impacted by a wildfire, and you've gotten through the winter, but you know that it's not the same physically, and a lot of the with most of the trees gone and most of the brush gone. When it rains, the rain doesn't soak into the ground, it tends to run off. So without me going into too much more detail, the bottom line is you're more vulnerable to flood damage than you had been because of the area you live in. And your home insurance policy does not pay for flood damage. So we invited 2 mitigation specialists with FEMA Region 8, that's your region in Colorado, to be with us today, Tracy and Peter, to help you understand what your options are for getting a quote to add, or what your options are to protect your property against the risk of flood damage. So thank you, FEMA Region 8. And I want to just, before we hear from Tracy and Peter, I'm going to unfortunately show you something that's a picture that speaks 1,000 words as to why we are adding this topic. The last thing we want to do is increase your anxiety. We're here to try to make things a little better for you, but we know that with the smoke in the air in some of your regions and this reality, that it's important that we explain to you that that you might want to make an adjustment to your insurance package. So with that said, Tracy and Peter, I'm going to stop sharing my screen so you can share your screen. And thank you so much for being with us.
Thank you so much for the opportunity. We greatly appreciate it.
Thanks, Amy. So with, as Amy just mentioned, with wildfires comes this increased risk of flooding following these natural disasters. And this presentation is going to touch base on the changes in flood risk due to a wildfire. how to best protect your property from the increased risk in flooding following a wildfire, and the importance of having flood insurance. Wildfires are a disaster that was in the news a lot this past year, but the flooding after fire is something that isn't always on the minds of people living near these burn scars, and it's often overlooked. What we have are large-scale wildfires that dramatically alter the landscape and create conditions that can significantly increase the risk of post-wildfire flooding, both downslope and downstream of these burn scars. And these tend to occur in areas that are not traditionally prone to flooding. So as Amy mentioned, normally the vegetation is absorbs the rainfall, reducing runoff, but the wildfires leave the ground charred and essentially unable to absorb water, thereby creating these conditions that are ideal for flash flooding. These flooding events are generally more severe as it takes far less rain to produce a flood or mud flow on these burned areas. Oops, sorry. And it's important to understand that these flood risks will remain significantly higher until vegetation is restored and the watershed has stabilized. Many people have this misconception that because they're not located near a stream or a body of water, that they're not at risk from flooding. You don't have to live near a flooding source or in these high-risk flood areas to suffer flood damage. And around 20% of all flood insurance claims occur in moderate to low risk areas. And in the 2013 flooding that we had here in Colorado, there was over 50% of the insurance claims were in areas that were low to moderate. So with significant changes to the landscape due to these wildfires, the burn scar areas are highly susceptible to flash flooding and mud flows from just minor rain events and precipitation. And they're known to cause trees and destroy buildings and bridges and roll boulders down slope. And it's sometimes difficult for people to visualize what, as I mentioned, mud flows are, but mud flows are described as rivers of liquid and flowing mud on the surface of normally dry land, often caused by a combination of vegetation loss and heavy rains. And this next is just a brief video that shows an example of mud flow. So mud flows have been described as having the consistency of a milkshake, and they differ from other non-covered earth movements where there are not flowing characteristics such as a landslide or slope failures. The terms mud flow and mudslide are sometimes misused interchangeably, but mudslides are a debris flow of rock, mud, and dirt that's thicker than a mud flow, and mudslides have been compared to having a consistency of cake. The main takeaway is that both flash flooding and mud flows are covered by Nfip flood insurance policies, but landslides and other types of slope failure are not covered in the Nfip.
So Peter, I heard you use the term chocolate shake and chocolate cake, and I love that because it helps people understand it, but sometimes people mix them up. So chocolate shake is covered, chocolate cake is not, because cake has a bunch of, it's more thick, right? Is that what got stuff in it like debris? Is that fair, right?
That's a fair assessment. That's
Okay.
correct. It's the consistency of the water to material, kind of what defines the difference between mud flow and mudslide. So one of the things is we can't say enough that people need to understand the increased risk of flooding in these burn scar areas and the importance of protecting yourself and your family. But you also need to think about protecting your investments, including your house. The time to review your insurance policies for your home is now, not after your home has been flooded. And many people assume that because, as you mentioned earlier, Amy, that because they have a homeowners or renters insurance policy that they're protected from flooding. But generally homeowners policies don't cover flood damage. And the best way for people to protect themselves financially from these post-wildfire flooding is to purchase flood insurance. And along with purchasing a flood insurance policy, take an inventory of your personal property within your home by documenting items and videos or pictures, and be sure to move, valuable items or irreplaceable items to higher floors. And now I'll turn this over to Tracy.
So let's talk a little bit about, flood insurance and the basics of flood insurance. So we basically like to say where it rains, it can flood. Just 1 inch of water can cause $25,000 of flood damage to your home. Flip to our next slide, Peter. Thanks. So I wanted to kind of point out the key differences between the homeowners and the flood insurance policy. So your typical homeowners insurance policy covers both your personal property and your dwelling under one policy with one deductible. The NFIP flood insurance policy, they usually will have coverage just for the dwelling, and they do not include personal property contents. So with the NFIP, that's the National Flood Insurance Program that's federally backed. The policy gives the property owner the option to purchase content coverage for your personal property as a separate coverage. So there will be 2 deductibles, one for the dwelling and one for your content coverage. Replacement cost is also available for primary single family homes with the policy building coverage limits equal to or at least 80% or more of a full replacement cost of the home. So the NFIP flood policy takes care of your personal property and other occupancies. They are paid on an actual cash value. So that means they're going to have depreciation costs for personal property. Under some homeowners policies, the foundation coverage may be excluded. Under the NFIP policy, the building coverage pays for permanent items such as plumbing, electrical systems, your HVAC systems, water heaters, refrigerators, stoves, and built-in dishwashers, permanently installed paneling, wall boards, bookcases, and cabinets, and also debris removal. Some items that are located in a basement, such as furniture, hot water heaters, and circuit breakers, also are covered, but other items in the basement may not be covered. So it's important to read your policy just to check any exclusions, because there are some exclusions in most policies, especially with flood insurance. Most homeowners policy, like Amy had mentioned, they're going to exclude flooding. They're going to also exclude mud flows. The NFIP policy is designed as a supplemental insurance policy. So it's going to cover this gap in homeowners policy to cover for flooding and mud flows. And we also do the coverage for foundations. So the coverages on your standard homeowners policies that are specifically excluded in the NFIP policy. Some exclusions are going to be property outside the building, like swimming pools, hot tubs, decks, patios, fences, and walkways, as well as septic systems. Any landscaping, driveways, sidewalks, and retaining walls are also not covered on your NFIP flood policies. Also, something that's going to be excluded are payments for living expenses, such as like temporary housing, and financial losses caused by business interruptions or the loss of use of the insured property. Damages that could have been avoided. This includes things like moisture, mildew, mold resulting from a pre-existing condition, or a lack of timely remediation are excluded. So again, it's important to read your policy so you know what is covered and what is not covered. So for the NFIP, like I mentioned, it was a federally backed program. Congress limits the amount of coverage in the NFIP depending on the occupancy of the building. There are different levels of maximum coverage for both the building and the contents. There's also the separate deductible, as I mentioned, for the building and the contents. The higher the deductible, the lower the cost of insurance, the lower your premium is. Homeowners and commercial property owners should generally elect to secure both building and content coverage, while renters elect to only purchase content coverage. So as a renter, you can get flood insurance. Private flood insurance, if the NFIP maximum limits are not adequate for your property, private flood insurance is likely the better option for you. When you're shopping for flood insurance, remember that many policies also have individual limits on items within a specific category. And they also have different deductible options. So sometimes there'll be a percentage of the loss as opposed to just having a plain $1,000 deductible or $2,000 deductible. So building under construction. Building a flood insurance coverage is not only available for existing structures, but it's also available for buildings under the course of construction and prior to being walled and roofed. In order to be eligible for insurance coverage during construction, work must remain in progress. If the construction does stop at any time, it may only be for a period not to exceed 90 continuous days thereafter for the policy to remain in effect. In addition, materials and supplies that are being used for construction will only be covered by the policy while those items are stored in a fully enclosed building at the insured's location or on an adjacent property. A special consideration for insurance coverage while under construction is that at the time of the loss, the deductible amount will be 2 times the deductible that would otherwise apply to a completed building. For more information on building under course of construction, we do suggest you review the Nfip flood insurance coverage policy, or you can contact your insurance agent and company. Remember, prior to starting any construction, it's important to consult with your local building department and floodplain administrators to ensure you're following all local, state, and federal regulations. We also have a resource link that we can also provide in addition to the resources that Amy had already shared. Some of these are just going to be specific to floodsmart.gov, which is the NFIP. Others is the Colorado Emergency Management Office. They do have some specific information for the wildfires that happened last year. So both of those resources, we've kind of put those in our link. And we can provide those. And I think our last slide that we have is just our contact information. We are available for anybody to reach out to us. We'd be happy to discuss flood after fire risks, and the best ways that we recommend for mitigating those risks, again, is by purchasing flood insurance.
So thank you so much, Tracy and Peter. I have a couple quick questions. One, you mentioned contact your floodplain administrator, I think is something people are like, am I who, what? So so that was one, is how would somebody find, well, why would they and how would they find their floodplain administrator?
I'm going to flip that over to Peter, as Peter has a great deal of information and background history for being part of that flood insurance management.
Okay, and then I'll just roll in the other question, which is, we understand that that Grand County was fairly recently certified as a community that participates in the flood program, and by that I mean they have said, yeah, we're going to enforce our building codes, yeah, we're going to try to help our citizens be protected against the risk of fire. So what is flood? I'm sorry, what does that mean, Peter? And is that where the floodplain administrator connection comes in?
Well, one, in order to contact your floodplain administrator, I would reach out to your city or county and contact them and ask who the floodplain administrator is. It could be, I've reached out to communities, and it could be anybody. It could be a postal carrier, it could be the city engineer, it could be the mayor. So reach out to your community, and they should be able to help you find who the floodplain administrator is. That would be the person who signs floodplain development permits for their community.
Okay.
If you have any questions with that as well, you can reach out to Tracy or myself, and we can help you find out who the floodplain administrator is for your community. As far as Grand County just joined the NFIP at the end of April. So with that said, that gives everybody the opportunity to purchase NFIP flood insurance. Again, that it also gives people an opportunity to, with joining the NFIP, there's a lot of other things that go along with that besides just being able to purchase flood insurance. There's grants through FEMA as well. It's,
For fortifying your home or making your home more, or your community more flood safe, flood resistant.
Exactly. So there's a lot of benefits to joining the NFIP. And we're just grateful and happy that Grand County worked together with us and finally joined the NFIP. So
yeah, and it makes the flood insurance cheaper if your community participates. And it's just a good thing. I'm guessing Boulder's a member, Boulder's a participating community. Is Larimer as well?
that's correct.
Great. Okay, good. So that's progress.
Yes.
That's protection progress. Okay. Sorry, did I cut you off or there's something else you wanted to add?
Oh, no, I was just gonna say, I actually used to work up in Boulder County, in the floodplain department up there. So did a lot of work with the city of Boulder as well. And they are a participating community.
But that means that all those areas are mapped for flood risk, right? So should
Correct.
some of our viewers tonight be nervous that they are going to get told that they must buy flood insurance, as opposed to that they have the option?
As far as must buying, well, that would be that there's a lot of things that are a factor in that. Generally, if you have a federally backed mortgage, then you are required to carry flood insurance if you're in the special flood hazard area, or the FHA, which is a designation on the flood insurance rate maps. But again, if you are outside of that SFHA in a low or moderate risk area, you can still purchase flood insurance, but that would be at a reduced rate.
Yeah. And as far as I know, and you can correct me if I'm wrong, most of these folks, I don't think living in a post-wildfire area is going to put you in a higher risk zone, right? It's not going to get you mapped higher risk. It's much more related to rising water and
Correct.
correct. Yeah. Okay.
And that's a good point that you just made as well, is the increased risk due to the wildfire downslope. Those aren't going to be mapped on FEMA flood insurance rate maps. As you said, they're temporary conditions that will last for several years. However, they will not be mapped on the flood insurance rate maps.
Okay. That's good. Well, this is great information. I so thank both of you, and thank you, Carrie, for the information about Grand County and this good news, in that, you know, this recognition that we're not helpless, and there are ways that we can protect ourselves and if we think ahead a little. So really appreciate your presentation and your time. And we're going to get to the Q&A portion. But for those of you who tuned in, we will be providing the information that Tracy and Peter shared, along with the deck from tonight by email. So thank you so much, and you're welcome to stick around. All right, we're going to get back to the main show. We just I don't think we talked about this. I don't think Tracy and Peter touched on this, but Carrie had created this information slide just to hit on something that I think people might ask. If I've already started building, can I buy a course of construction flood policy? So this is just a little bit more information there. So we did get a number of questions in advance, but those of you who may not have submitted a question in advance, you are welcome to do so now in the Q&A. We're going to go through the questions that got submitted first. And then if we have additional questions in the Q&A section, which you get to with your little control bar here on Zoom, it says Q&A, and you can type in a question and we will do our best to answer it. So just a review of the topics that people have been communicating with us about. The challenges people are reporting to us and coming to us for help with include not having enough insurance, being underinsured, and then dealing with the fact that material costs have spiked, lumber, and that's putting some of your projects way out of budget and out of sync with your available insurance funds. The constant chronic problem people have with adjuster communication, adjusters being slow in responding, adjusters not responding, people, having rotating adjusters is common because typically after a large event, insurers have to bring in backup, and then they have to let those people go home. So to the extent that some of that is unavoidable, it is very much your right to insist on continuity in the way that your claim is being handled, notwithstanding the fact that there may be a new adjuster. They still have a duty to you to adjust your claim consistently, timely, and fairly. So if you feel like you're getting jerked around by rotating adjusters, that's a good reason to seek help from Tracy's agency. And we will have a slide that gives you the contact info there. People struggling with their home inventories are very common. People having issues with the way that an adjuster is overly depreciating some of their assets or undervaluing some of their losses. And then just the sheer pain of having to force your brain, to dredge up all the things that you lost, which of course I believe your heart is trying to help you forget. And so you have to force yourself to remember all these things to do your inventory. So looking for ways to shortcut and make that process less challenging is something we'll be talking about. The valuation battles or dwelling, the cost of putting your house back, or the cost of you buying a house to rebuild. And then for people who had what we call partial losses or standing homes, lots of issues around difference of opinion between the homeowner and the adjuster or the insurance company as to how compromised the air quality is in the home, how much damage, thermal damage, extreme heat and smoke damage and particulates may still remain at the house that needs to be fixed. And those are very, very common disputes. So the first question we have is relates to spikes in the cost of rebuilding. PH wrote that their rebuilding estimate is $120,000 over their policy limit, so underinsured. But a great deal of the gap is due to increased material costs. Will insurance companies cover these costs? Why don't I give Scott the first crack, and then Tracy, I'd love to hear your view.
All right, thank you, Amy. First of all, everybody needs to know that we have a perfect storm happening right now in Colorado as a result of COVID and the wildfires and everything else. First, the supply chain for building materials is totally disrupted, and the supply and demand curve has shifted so far to the right that materials costs are just through the roof. The second thing is that the cost of replacing a property in Colorado, because of the real estate market here, is outrageous. And the third thing is everybody is underinsured. Not everybody, but most people are underinsured. I think we've talked to 20% of homeowners that have adequate insurance in these Colorado wildfires. And that, Amy and everyone at United Policyholders, their team will tell you that this is a far higher number of underinsured percentages than before. So the answer is, if you can hold out, today I heard that lumber prices have come down 50% from their peak. And what we're hearing is as soon as Canada raises their lockdown and we're able to buy Canadian lumber, that lumber prices will come back to very close to where they were before. So, my advice is be very careful signing a contract that locks in a lumber price at 50% or 75% over what it may be in 30, 60, 90 days. Be very careful with that.
Well, it's very, sorry, go ahead, finish. I thought you were done.
I'm finished.
Yeah, that's very pragmatic advice, and I appreciate that, because I think, we hate to say in an answer to will insurance companies cover these costs, we hate to give a black and white no. But we want to, I think the real answer is, if there's a way to avoid having to get into a fight trying to get them to pay over, then that certainly is easier on you. Tracy, anything to add here?
I agree. I think I was glad to hear that the lumber prices are going down. I think that the answer to this is the companies will not voluntarily pay more than what the policy affords. So you can look back at your application to make sure that was processed timely and accurately, but a snapshot in time of the policy of the date of loss is what they're going to stick to. Just make sure you're getting all of the coverages that are available to you. Just
Right.
the extended replacement cost and increased debris removal type coverages.
Exactly. So since I slightly talked over Tracy by mistake, just want to make sure everybody heard what she said, which is the question says that the estimate is 120K over my policy limit. That's a big number and a scary number. But just to make sure that my policy limit includes whatever is available in that policy, whether there be building code upgrade coverage and or extended replacement cost coverage, you want to do your own math to make sure that you've calculated your policy limit accurately. And the other thing is that United Policyholders we did a couple of webinars previously for Colorado wildfire impacted households about underinsurance remedies. And we had a lawyer on talking about, when might you have a case against an insurer. Certainly $120,000 gap is quite significant. And extended replacement coverage is supposed to account. It's the reason, that's a big argument that insurers give as to why they even have it in there, is why they sell it to you for extra money. The extended replacement cost coverage is to account for price surges, demand surges after disasters, but obviously it's not working here. So I would encourage you to make sure you've done the math right to know what your limit is. If you have, as Scott said, the time to defer your project a little bit and give things a chance to normalize, that should help. And then watch our underinsurance webinar and see, do you actually have facts and circumstances that would give you leverage to get an above limit settlement. It can be done, but it's very challenging to do. And you have to have a good history that shows that you're underinsured through no fault of your own, and that you relied on representations that the insurance company or the agent made, that the amount of insurance on your dwelling was specifically accurate to your dwelling. So this is a good, actually, this is more of a buying tip, but like so many others, SW wrote, we are underinsured and scraping sources together to pay for rebuilding. Any tips on how to keep current with rebuilding costs to adjust policy limits accordingly in the future? And we have a few tips to offer, which is to make a specific request in writing to your insurance company to calculate it for you, and then confirm in writing that when they give it to you that you are relying on that estimate, or you can pay a professional to come out and inspect and estimate your home's replacement cost. Now, that's one of those tips that's easier said than done for most people. You can get a builder to give you a ballpark estimate for a home of your approximate square footage, but getting somebody to actually come out and give you a rebuild estimate, there are people that do it. They do it for insurance companies. But again, you can ask your insurance company to send somebody out and do that inspection, and some of them may do that. Tracy, anything to add?
What I see sometimes is, insurance companies don't send the documents that support the replacement cost on the policy. So a lot of folks are taken aback when they get an explanation and they say, no, I had a finished basement, or I had a garage, or so, because the companies don't send that to you proactively. For the folks that have lost their home, unfortunately, you now have a more current rebuild estimate because you're doing it. So that's you should use when you calculate your rebuild on your new policy or on your renewal policy. And Colorado does require companies to consider architects or licensed contractor bids for that. So I think that for us, it would be aware of what your policy contains. You sit with your agent and you fill out an application, but you can't be sure that that application is really what is the basis for the recoverable, the RCV, until you see it for yourself. So
Yeah, I want to sneak a question in that came in the Q&A because it's relevant to what we're talking about right now. George writes, with the limited availability of contractors, what is the obligation of the insurance company to compensate you for work that you have done yourself? Specifically debris removal, equipment rental, and hours of work versus what a contractor would charge. This is a good question and a common one. And I'm going to start with you, Scott. And we get this question. People say, I stayed on my my buddy's couch, or I slept in my friend's guest room. Can I put in for ALE reimbursement for that, even though I actually didn't have to pay him? And that can be tricky because you don't want to do some kind of a fake agreement if you actually didn't have to pay. At the same time, it does, we have seen some insurers be willing to compensate people for their sweat equity or for the equivalent of something they got that they could have actually paid for. So Scott, you did your own debris removal. What do you think? Can you look to your insurer to compensate you for that, or equipment rental and or hours of work?
Absolutely. They owe you for the cost to repair, replace your damaged property up to the limits of liability. If you do the work yourself, they owe you for the market value of those services that you perform for yourself. I mean, there's no reason for you to pay a third-party contractor to do that if you have the ability to do it and if you want to do it. And not only should they pay you for your actual costs of materials, but they should pay you a market rate for the labor that you expend to get that work done, plus normal overhead and profit. Now, if they turn you down for something like that, you need to confront them with it, because Amy, I learned this from Amy probably in 1991 when United Policyholders was formed, and that is that insurance companies are friendly, but they're not your friends. They're trying to save money. So you have to document and confront them with these issues, and they should pay up to the limits of liability. That's the other critical issue.
Yeah, and I think, I know Tracy is somebody who, I think you had been a claim adjuster before joining the department. I think claim adjusters are trained to get it in writing and go on what they get in writing, right? So in a situation like this, I would say, you got to provide documentation, written documentation of the number of hours, the receipt for the equipment rental, and any costs you incurred, and actually put that in writing. Anything to add to that, Tracy?
Yeah, that fact that there's nothing in the policy that says who can do the work.
That's
So,
true.
right, if you push the issue and they push back, to ask them to show you in the policy where it's required to be done by a professional and someone else, you won't find it.
Excellent. And this is a little different from when people say, I want to put in a claim for, let's say, the time I did to put into my inventory, you know, what I could have otherwise been working on work, you know, it's different. This is different. You know, you actually did, I mean, you're obligated in the policy to provide an inventory. You're not obligated in the policy to be the one who does the work. So it's a different thing. Is Carrie, anything you want to add on that?
Thanks, Amy. The only thing that I would do is emphasize what Scott said and say that even though an insured is not supposed to, quote, profit from a claim, if you're acting as the general contractor, you're entitled to the overhead and profit percentage that a general contractor would charge. And many people don't think to add that to the documentation they send in if they're doing work themselves. I mean, there's certain requirements around that, or policy, or you know, guidelines that different insurers use. But I know I've fought for it and won on more than one occasion, and it makes sense to make sure you do include that. And Scott, what is the percentage in Colorado for that now, for overhead and profit that's common?
10 and 10. 10% overhead, 10% profit. You know, the die's been cast. That's what they're paying. That's what they need to pay.
So if you did $1,000 worth of work, you in materials and services, you could charge another 10% in overhead expenses and 10% to pay for your time over and above the actual labor time and cost.
Yeah. Okay, so next question from SW. We're planning to rebuild our home lost in the East Troublesome fire. We would like to have some examples of supporting documentation that have been successful with other rebuilders in getting funds from the insurance company in ordinance and law category. So what we've given you here is a link to a sample of a code upgrade estimate that you will find on our website free of charge. And it's basically, Xactimate is the format that insurers, most insurers are using today. And so we have provided this code upgrade estimate in that format. And basically it's just kind of like what we were talking about just now about documenting your time and writing and expenses in writing. You have to break out those code upgrades, not you, a construction professional needs to break out those code upgrades based on what they know about the building codes in the region. And that's where you really do need a professional to do this, because it's, unless your county, and this I don't know, unless your county has published a summary of common code upgrades that are required. And Boulder may do that because Boulder's had so much experience. I know that with wildfires. So it's absolutely something you can, if you have a builder who's says, I'm not familiar. Well, hopefully you don't have a builder who says they're not familiar with the codes. But if your builder is kind of hesitating to help you with this documentation, you can call your local building department and ask them if there's somebody that can give you a list or work with you to identify some of the codes that people typically need to make upgrades to comply with. Anything you want to add here, Scott or Tracy?
Some of the companies that we've worked with through complaints have set precedents for themselves. So that some of them are just paying O&L, ordinance and law, upon a signed contract, if the rebuild is already exceeding the policy limits. So if your company won't do that, you might want to contact us to find out if we know that they have done it on other claims. Because if there's no Colorado statute, you look to the policy, and if company starts acting in a particular way and taking action, then they have set that precedent, and they have to handle all the claims consistently.
Right, and I would agree with that. That's good leverage. The Department of Insurance obviously is collecting those kind of issues. If one company, they can't treat you differently than they treat somebody else. The other point on law and ordinance is that the coverage there is one of the few coverages in the policy that must be incurred in order for the carrier to be required to pay it. So if you do have a construction contract and your contractor says this is law and ordinance, part of the law and ordinance requirements, then it's up to the insurance company to properly investigate the claim. And they can't just say, well, we're not paying it because we don't believe that. They need to go to the building department and find out the answers to these questions. If they raise the question, they got to go find the answer, and woe to them if they come back and tell you that it's not covered when you know it is.
Okay, and for those of you who may not be looking at the chat while we're talking, Carrie has shared that all 3 counties do have lists online of the various code changes and dates they've taken effect. So the bottom line on this topic is, if your insurer is requiring that the code upgrades associated with replacing your dwelling need to be broken out, they're within their rights to ask for that, except for if they're one of the companies that has set the precedent. So this is one of the that they don't need it. So I think if your builder has a decently detailed estimate, generally you should be okay. But if not, and you need help, check in with with your county with those links that we showed earlier. And then if you feel that if your insurer is giving you a hard time, get in touch with Tracy's agency, and they may be able to help you with that. Okay, and this is just an explanation of how code upgrades work in this process. The insurance policy covers what you had, the day before the loss. Insurers will say, well, we don't pay for betterment, so if you have to make an improvement to bring your project up to code, that's on you, unless you paid for this coverage. These days, most policies should have some ordinance and law coverage. We, of course, at United Policyholders, being consumer advocates, feel that it's unfair for insurers to sell a policy that's labeled as replacement cost if it actually doesn't pay for you to replace the dwelling and get a certificate of occupancy and permits, right? So we do encourage you to push back if your insurer is balking at paying the true cost of replacing your home if your policy is a replacement policy. But hopefully you don't have to go to the mat on this. And this is just an example of the common issues are going to be the common systems that need to be upgraded are often going to be electrical, plumbing, and windows generally. All right, mortgage forced place insurance. So if you have a federally backed loan, FDIC insured loan, there is a requirement in the law that your home, the collateral for the loan, be insured. And so mortgage companies have the right, if you let your insurance lapse, to force place insurance on your property so that the collateral for the loan is continuing to be protected. The problem with forced place insurance, it tends to be very expensive and not great coverage. So if you have this happen to you, where a forced place policy gets put onto your property, you want to immediately get a better regular policy in place, and you should be able to get a refund of anything that hasn't. Hopefully it'll happen quickly and you won't get billed for that forced place policy. This person had a mortgage with Quicken Loans, and like a lot of people, this person canceled their homeowners policy when their home was destroyed. we understand the logic. There's no house there anymore. Why should I keep paying for the insurance? We recommend that people not do that because you want to have insurance on the lot to protect you in case somebody were to get injured on the lot and sue you. You also want to have insurance as you replace your contents. And also these days, once you have insurance on a home that's in an area that has had wildfires, it can be harder to get insurance. So we find generally it's better to keep your policy in place, but reduce the limits considerably. So in California, we fought for a law that forces insurers to work with you to reduce the limits and reduce the cost of the insurance during your recovery phase. But that's not the law in Colorado. So this person tried to get other insurance and so they want to know, is it customary for the Division of Insurance to allow insurers to sell policies on homes that do not exist? So I'm going to throw this hot potato to you first, Tracy.
I think people would be surprised that we don't allow a lot of things, or we do allow, right? So there's not a lot of statute in Colorado. I'll just say that, right? There's really not a lot there. We don't go to the granular level. So in this case, there's a contract between the homeowner and the mortgage company. That's a contract that's outside of insurance. It's outside of our jurisdiction. We don't regulate mortgage companies, but I do feel for you. I think this is the worst coverage you can get. It's very expensive. It only covers the mortgage company's investment, their dollars, not yours. So I'm concerned that you can't get another policy. That's sad. I don't know if you can get a builder's risk policy when you're rebuilding. But I would say work your hardest, maybe contact a broker, somebody who can try to field your need out to a couple of different companies, even if you have to go to surplus lines, which is a non-admitted group of companies that insure higher risk. But anything I think would be better than forced place insurance.
Yeah. And as far as shopping help, certainly you can, we have a publication on our website, dropped by your home insurer in Colorado, where to go for help. Now, obviously you weren't dropped, you canceled it, but still for shopping help, I would recommend you take a look at that publication. And Carrie, I don't know if you have a way of, you're doing such a good job there in the chat.
Yeah, I'll put it in the
Awesome, thank you.
chat.
Scott, anything to add here based on your knowledge of the market options in Colorado these days?
Yeah, not much in terms of obtaining insurance after you drop your policy, but I don't even want to get into force-placed insurance. It makes me grind my teeth and makes my blood pressure go up. It's horrible insurance. It's not very well regulated. I don't even think the division regulates it at all. And that's the case in most states. It's a real racket, even more so than normal homeowners insurance. So
Yes.
I have no suggestions on how to recover from something like that other than to shop like crazy.
Yep.
Should be able to find somebody that can get expensive insurance, but it's not going to be $10,000 for the mortgage insurance. It's just not.
So I just want to remind our attendees, there are 2 places in your little toolbar that you can find the links that we're sharing. One is in the chat and one is the Q&A. So look at them both, please, and you will find helpful links. Okay, inventory waiver. Why does Colorado law permit insurance companies to require an inventory listing in the event of a total loss when it would be impossible for the average person to recall all the items in their home, which of course, we are so empathetic with this. We are working very hard to convince insurers to relax the itemization requirement, but it has been baked into their policies for a long, long time. And in non-disaster settings, they use the inventory requirement as a way of screening out fraudulent claims, which is always their argument as to why they require it. And we have gone several rounds. We went around in the legislature in your state trying to get the rules changed for wildfires, because obviously when you had nothing to do with burning down your home and there's no question of fraud and you lost everything and they had collected a premium for a total amount of contents, your total contents are gone. There's a very strong argument that they should cut you a check without making you list everything. But insurers have held the line very tight, at least in the legislature. But in real life, we see a lot of negotiating. We have, if you watch one of our recordings of one of our contents help webinars, you'll see that that some insurers will accept reduced itemization, reduced specificity, meaning they won't make you list every single book by title. You know, you can say 10 books on baseball and what have you. And then some insurers have waived the itemization. And in that case, I should let Tracy say this because it sounds better coming from her. But and she will, but seniors, these are, if you're having if it's really if you have age-related memory impairment, and I do think it's unconscionable, and I do think it takes advantage of the elderly, but those are things that should be put in writing to the insurance company, along with a request for a waiver. And we have a sample letter that we've given you the link to. We've also given you the link to a disaster distress helpline where you might be able to get with if you are helping a senior, or if you are a senior and you're trying to help yourself, where you might be able to get a case manager or somebody who can give you support. Some insurers will send a specialist out to work with you and help you with your inventory. And we at UP offer everything that we can to try to make it less burdensome. We have a sample of a completed inventory. We have a sample of an inventory with prices and without. And that's what we give you. So Tracy, how can people find out whether their insurer might be waiving it for other people? Is there any way to figure that out?
Yeah, so, I mean, I think that as an analyst, we would be a little cautious to say that over the phone, but if they filed a complaint, we could make that point, right? So we could, and there are carriers that we know of that are just paying limits on it. It's a total loss and that's what they're paying. So I would suggest filing a complaint. And by the way, complaints not only allow us to help you, but also to help other consumers.
Yep.
If and when this ever gets to the legislature again, because there was legislation that allowed for that forced the 30% without an inventory, so there's no saying that there can't be legislation in the future. So the more complaints that we have, when there is a legislator that wants to perhaps champion a bill, they will come to us and ask for the records that we have. So this is an issue that has come up in almost every single complaint that we've had. It's painful. It's a story to tell. The commissioner is empathetic. We're all empathetic. It's just that we're limited to what the legislature gives us. So we have to get a legislator who's willing to revisit this issue and put the human factor around it.
Yeah, and we really invite. We're going to be going back to the legislature with suggested further amendments. We in Colorado, your insurer does have to offer you 30% of your inventory without an itemization, but we know in reality that, well, for one thing, we hate to see people leave 70% of their policy benefits on the table. So we are not really that enthusiastic about how that law came out of the sausage factory that is the legislature. But so we are going to take another run at it. And, in California, we tried to get 80%, we couldn't get that. And so, but we do just what Tracy was saying is, if you hear of somebody who got a waiver, that's evidence, like put it in writing to your insurer saying, my neighbor got their insurance company didn't make them itemize, and also just make sure that you that United Policyholders has your information. Obviously we do because you registered for this, but if you are interested in helping when we get to the point where we go to the legislature and ask for, and we're going to need witnesses. So, let us know by email. if you're willing to be, to help out with this down the road. I know obviously right now you're in the thick of it and we don't ask anything of you other than to come to our events if they can be helpful. Okay. Those were the questions that got submitted in advance. We've got 2 that came in that we haven't answered yet. So we're going to hit those. And then we're going to go over some very important points about if you have gotten into a relationship with a professional that's not working for you. We're going to talk a little bit about that. But we got a question from Julie and Tom. We lost our second home that they previously had spent a third of their time living in. What is their chance of getting 100% of their loss of use over the 21% the insurer has offered? So Scott, I'm going to start with you. Second home, they're admitting they only spend a third of their time there. What do they do?
Yeah, this is a great question. And frankly, I wish you'd asked Tracy this before because this is Tracy's hot button.
Okay.
She doesn't like it when carriers try to interpret the ALE to the detriment of their policyholders. So I'm going to flip that to Tracy.
All right, I hit you first because you're a bulldog. So, okay, Tracy,
I'm a bulldog too when it
you
comes
are, you very much are. You're awesome. Go ahead.
So my feeling is you paid for that coverage and they better give it to you. I don't know where these percentages are coming from. So you may have only stayed there for a certain percentage last year, but it was available to you. So, and you want to be there now. And so, yeah, that's one we would look for a complete ALE handling just as if you lived there 100% of the time. That's how we would approach it. And we wouldn't ask nicely. We would ask them, why aren't they doing that? So we would expect them to do that. So.
Yeah. Okay. Well, that's a very good answer. Okay. We have another one, ordinance and law. We're rebuilding in another state, different house plans. Our adjuster is questioning our submitted ordinance and law claim, saying that due to materials of like kind quality, since the old house has a metal roof, the new house has asphalt, our adjuster doesn't consider this like construction. We want to know, how should this be interpreted? Okay, so this is an interesting one. We always advise before you start on a project, after a loss, that you reach an agreement with the insurer over the theoretical, hypothetical cost that it would have been had you replaced that house with one almost exactly the same. And then whatever you spend to replace it, as long as it's just up to that amount that you agreed with the insurer on, it doesn't matter whether it's an octagonal house or, whatever. But in this case, it seems like you may be trying to you're negotiating as you go. So let's start with Tracy. Rebuilding in another state, different house plans, ordinance and law.
I honestly think this would be a tough one for me to give a straight, an answer, because all policies are a little bit different. And then again, I'm not sure it goes to that granular of a level in the policy. So then you would have to go to, what is the procedure? And again, we would want as much coverage afforded as possible, policy limits if you're rebuilding anywhere. So, but it's a hard question for a black and white answer.
Anything from you, Scott, on this one?
Yeah, I agree with Tracy 100%. I don't think the insurance company has the right to restrict. This is when you get to the point where you settle the claim and you know how much money's involved and how much you're going to get. It's not, the insurance company doesn't have the ability pursuant to the policy to restrict whether you have a metal or shingle roof. It's all about the money.
Right.
If the replacement house costs $450,000 and you have $450,000 in policy limits plus extended replacement cost, they owe that to you. Yeah, I mean, there should be no argument. Now, having said that, insurance companies will argue all the time to try to save money. One of the biggest arguments that we're starting to see now is that attempting to deduct the land value from, on the new house from the cost of extended replacement costs so that they can pull that out of the adjustment. And we don't think that's legit either.
Yeah.
I'm sorry, Amy knows the answer to these questions because I think that got dealt with in Colorado. I hope I helped with
In
that answer.
California. Yeah, yeah. I mean, I just wanted to make sure everybody, yeah, we got the slide up here for Tracy's agency with the link for the website and also the email address for filing a complaint. And on this land value thing, I'm sorry to hear that, Scott. That's like a virus jumping from California to Colorado. The right to replace your home by buying instead of rebuilding is very common sense. It, you know, certainly helps people who are seniors and can't deal with a construction project, people who want to move out of the WUI. There's every reason that insurers should let you take the money they would have paid you, would have owed you to rebuild at your original location and let you take that money. And as long as you spend it, use it somewhere else, right? But insurers, and when the law in California first passed that gave people that very clear right to take their insurance money and use it toward a purchase, we didn't hear a lot about the land value. And then some genius at an insurance company said, oh, I have a great idea how we can save some money here. We don't insure land, so let's, you know. And so then we started having this fight. And the legislature had to go back twice and amend the law in California to say, no, we really meant you get the policy benefits that you would have had. You get, if it's code upgrades, if you would have had to upgrade, you know, to rebuild the old house and that triggered your code upgrade coverage, you get that. If it was above your stated limit and you have extended replacement, you get that. But you know, it's been a fight. It's been a fight, you know, and I guess sounds like it's going to be a fight there for some folks as well. But you know, a lot of people have won the fight and we're going to keep on going to bat for all of y'all. So Tracy, we did get sort of a follow-up question from the person who asked about the ALE. And they were asking what is ALE, which I think that got answered. It's additional living expense. It's just another brand, another name for the same thing as loss of use. So additional living expense, temporary living expense, loss of use, all the same thing. It's the expenses that you have incurred or that you are incurring because you've lost the use of the insured asset, the home. Okay. So whatever label the insurance company puts on it, it's the same thing. And so they were asking the follow-up question in addition to what is ALE is, do you recommend, Tracy, that they ask their adjuster for the full 100% of their ALE benefits?
Oh, we have tried some negotiating, I think, Scott, with some of your PAs. We've tried to negotiate in exchange for a release for that portion. I mean, we've tried everything. So the company, some of them are more generous than others, I'll say. It would never hurt to ask. We've done it ourselves. I've gone back a number of times on ones that I really felt were it was relevant to ask for that because the living arrangements, there was very few rentals. And these folks had homes that were very unique and they couldn't find it elsewhere. So there were really good grounds for, hey, let me cash out and just I'll do it on my own. And I think that's what the question's getting at. Can you cash out that portion and then just take care of it? It doesn't hurt to ask. Sometimes we're lucky. Sometimes they just say no. So, but we won't give up. I mean, I think Scott referenced, like we will just continue to go back until hopefully we wear them down, or they come to realize that they can't just work up some software program. This is real life on the ground. There are very few homes. There is just a limited amount of inventory. So they need to expand what they're looking at. They need to be more creative.
Yeah, and just, I may have confused you on the ALE, on the person who wants to get the full ALE for the loss of use of their home, additional living expenses for, I guess they don't have to, this was a second home, right? And so they no longer have a second home. So they have to, they would incur rental fees to, because they've lost the use of that, right? So I think they're asking if we rent a place for 12 months, can we claim that whole thing? I think your answer is yes, right?
Yes, definitely. And you know, a lot of folks in the area have trailers. I mean, I think that's a big thing that I've been seeing in a lot of the compromises. The insured goes and buys a trailer that can be put on the site so that they can stay there again because of the limited inventory. So I guess I would answer that question and just dismiss that it's a second home, because to me, that doesn't matter. To me, it's the same, whether it's a second home or not.
Yeah, okay. All right, and so those are all the questions. I think, Carrie, is there something you wanted to add on the ordinance and law? The question about rebuilding in another state, we already covered it, but we can go back if you have something to add. Different house plans, adjusters questioning the O and L, saying that it's a different home and therefore you're on mute.
I think just again that it's like you already said, Amy, that it's about establishing what the old home would have cost to rebuild, and that's what you collect on when you build the new home.
Yep.
But a question that came to mind that might be connected, that I was curious what Scott and Tracy would say about this, because this comes up quite a bit. If a homeowners association in the neighborhood where you're going to rebuild requires you use a certain level of asphalt shingle or something like that, which is more expensive than perhaps what you had in the previous home, is that usually covered under code and ordinance? Or are they not? Does it have to be a civil authority?
I'll take that one on. I believe that it's a civil authority issue. If it's not required by a building authority, the insurance company won't pay for it. But that's a great question, because maybe you can get them to pay. I'm not a lawyer, so I can't opine on that from a legal perspective, but that's that's good leverage. If your HOA requires that you use a certain type of shingle, I'd take that one on any day.
Yep.
I would love to see the policy language. What does the policy language say? I think sometimes there's gaps there where if it's ambiguous, it's going to be resolved in favor of the policyholder. So I think that's a good argument too. I'd take that.
Yep. All right. So, we got one last question. If your itemization value is only 35% of the amount of coverage, is there any way to ask your insurance company for the more? I'm going to give a short no. However, maybe you need help doing your inventory. Maybe you missed things, because that sounds awfully low. 35% for a home that you were living in. And I guess that maybe that was their second home. Look, we will never advocate that you fudge or you pad your inventory. So if you literally only had 35% of your policy limits for contents, then the only way you'd get any more than that is if your insurer was blanketly paying limits to all its policyholders without a waiver. And unless you have evidence that that's happening, you're kind of stuck with your inventory, which is generally something you submit under penalty of perjury.
And Amy, I just wanted to point out to people again, all of these links that we're talking about, I have put in the chat, including just now a link to our intensive webinar that we did here in Colorado several months ago, where we get into great detail and we have experts along to help clarify and answer a bunch of questions in that video. So I encourage you to click onto that, and then you can watch it, or you can get a copy of the documents associated with it easily on our website. I have also included the information for Dora in the chat as well, to file a complaint or to see, to get your issues aired through the Division of Insurance.
Yes, thank you. So we've gotten just a little bit more time left here. So what I want to do is I'm gonna I hit on this topic that I said we'd hit on, which is when somebody has presented something to you, a contract that's too good to be true, and it probably is, and you're stuck with it. How do you get out of it? And I guess I would ask, maybe I can start with Scott. Are you seeing, certainly, we know that there's entrepreneurial salesmanship that goes on. Are you seeing people coming either to you that are stuck in a contract with somebody that's not actually getting any services for them? Do you want to touch this, or do you want to pass it to Tracy?
No, I'll take it. First of all, contractors are not required to be licensed by the state of Colorado. Typically in different venues like Grand County, Boulder County, and maybe even the sub-governmental entities like the towns up in the mountains, they may be required to be licensed. But the the public adjusters are required to be licensed in Colorado. And because these are performance-based contracts, if they're not doing what they're promising to do, although you'll have to hire a lawyer if they won't let you out of the contract, they should let you out, because they're not performing pursuant to their own agreements. As far as dead-end contracts, where they sign up a homeowner and they don't do anything, that's a huge problem, but it should be easy enough to get out of if you hire a lawyer to write a letter.
And
They
what
need
kind?
to,
Sorry.
go ahead.
Well, I mean, what kind of lawyer? Like, do you just a regular old? The lawyers in our directory are mostly insurance people, but you just a regular business lawyer can do that.
Yeah, I would think that any lawyer, I mean, this is a contract issue that doesn't really relate to insurance. This is a personal services contract, and our company position is if one of our clients doesn't want to work with us, we'll let them out of the contract, no questions asked. You may need to pay them on a quantum merit basis, which is a legal term for you have to pay them for the hours that they spend on it, reasonable hours that they spend. But this is not something that they can just shove down your throat and say, hey, you hired us. You have to pay us a percentage of whatever you recover, or we recover under the contract. That's not the way it works.
Yep.
So I think any contract, well, lawyers are contract interpreters. I think any lawyer that is worth his salt should be able to get you out of something like that with one letter. And if they fight back, you may have a fight on your hands, but they don't have a very good case.
Yeah, Tracy, do you guys work with you have a contractor state licensing board in Colorado? Yes. You guys kind of tag team?
So they don't have to be licensed on the state level, only on the county, and some counties don't even require it. It's a sore spot for us because we know that consumers are vulnerable. They're hiring these contractors. The Attorney General's office has a consumer protection area that we send folks to.
Oh, okay.
We do regulate public adjusters though, so they are within our jurisdiction. And I've had one or two where either the public adjuster just disappears, so it sticks the insured with a check they can't cash or something like that. They usually respond when they get a letter from their regulator and they easily want to walk away, right? So if it's a public adjuster, yes, there are recourses from the state. If it's contractor, it's either going to be a county or the Attorney General's office.
Okay, so what I'm gonna do is in the last couple minutes here, just quickly go through the deck so that people can see what is in it. And then we will just make it available to everybody who registered. So we talked about this for contractors, different types of professional help, knowing your rights, the sources of your rights, your state's laws, regulations, the language in your policy, and something called the Covenant of Good Faith and Fair Dealing that's read into insurance policies as if it was written in black and white. That's where you get your leverage from. You know, we talk a lot about negotiating by paper trail because putting things in writing is generally the best way to get a problem solved, as long as you've put it in writing in a diplomatic way. Going up the chain at an insurance company is always important, but always hard. You know, figuring out who's over your adjuster's head can be difficult, and that's where the Colorado division comes in. They can help you get over your adjuster's head, go over free of charge. So this is just a link to the Fair Claim Settlement Practices regulations in Colorado. And you can see that there are a lot of laws that protect you from unfair claim practices. And often it's just a matter of figuring out what it is that you want and need, and then articulating that. Because I think a lot of times people feel that they've been seeing all these ads, so they think that the insurance company is going to sort of take care of everything. And the reality is it's your assets, your home, your property. And so you have the biggest stake in making sure that that you're offered a fair settlement under the terms of the policy, and that you flex your own muscle and the squeaky wheel gets paid. So a lot of what, you know, we're here to tell you is you're not alone in this situation. And if you're having problems, there are resources and you have leverage. So just a few more reminders that your insurer cannot require you to have your property repaired by a specific person or entity. So you have the freedom to pick who's going to do the work. In Colorado, you have a full year after your loss to submit your inventory. And then you have another year from the time your ALE coverage benefits expire to replace your property and collect whatever depreciation the insurance company held back if you have replacement value coverage. And we talked a little bit about the Homeowners Insurance Reform Act of 2013. If you want to know more about that, you'll get information in this deck, but also on our website. And Tracy's agency is very pro-consumer, and they have put out a number of bulletins to help you, that may help you with getting an expedited payment, or if COVID has been slowing you down on your project and your adjusters hassling you, there is a bulletin that addresses the fact that COVID has made some things more difficult and time consuming. So what can you do with all this information? You can use these resources as a tool to get your claim paid fairly and promptly, and to politely and professionally remind your adjuster of these regs and your rights, and to engage with the Division of Insurance. So there's lots of ways you can solve disputes: mediation. There's something called appraisal, which in the insurance context is a term of art. It's a process kind of like arbitration, where if the insurance company is saying that the value of the loss is X, and you've got a construction professional who's saying, and then it's Y, and you can't come together, and Tracy's agency cannot break the logjam. Appraisal is a process that can be faster and cheaper than litigation to resolve just that issue of what the insurance company owes you. And you can learn more about these things at our website. So I want to just remind you of the things that are coming up. We will have another one of our survivor to survivor forums on Tuesday, July 6th, after you're done, hopefully enjoying what you can of the 4th of July weekend. And those forums are informal. It's not like this where we have a panel of experts. Those are, you will be with other people in your situation and people who have been in your situation in the past. Chatting about real life on the road to recovery and strategies and ideas. So these are the next ones that are coming up, and you can find those in the events section of our website. All of these events are free. You just have to register. And we do have kind of low participation. They had in Colorado we didn't get a whole lot of people participating in our survey. And we just, whatever you can do to spread the word about our wonderful, free, pretty high level help, we appreciate. So if you have friends and neighbors, if you can share with them what we've got going on, let them know. They can register for free, and they can see recordings of past events. We really encourage you to do that, because really we're here for you, and we want you to thrive and keep on moving. So
Amy,
hang
there
on,
is-
just thank
Okay,
our Colorado funders, the Community Foundation of Boulder County, Grand Foundation, the Grand County Wildfire Emergency Fund, and the Center for Disaster Philanthropy, that really understands why what we do is so important and is helping us be here for you. Yes, Carrie.
There's just another little string of questions that came in on the side here that I sent you in chat. I don't know if you have time or bandwidth, but can you see that?
Not in the chat, no. No, I don't.
Do you want me to ask it?
This one here, can a PA act as a contractor too?
Yes.
I'll take that one on.
Okay, can a PA act as a contractor too? Does a licensed PA have to comply with Colorado regulations if they're working for a contractor?
In Colorado, a public adjuster, it's illegal for a public adjuster to work as a public adjuster and a contractor on the same claim. Unfortunately, it's not illegal for a public adjuster to also be a contractor. So you have contractors blowing in Colorado who have public adjuster licenses in other states and represent themselves as public adjusters. And they can do that as long as they're not hired as a public adjuster. Insofar as a public adjuster, a contractor having public adjusters on staff, I think that's immoral. I believe it's unethical, and it even could be illegal. And we're looking into that now.
So Tracy, anything you want to add there?
The contractors acting as public adjusters is an issue that's growing. We're seeing it more and more. So it's a line there, right? They can't talk coverage, but they can talk rebuild estimates. So it can sometimes cross the line if it's done innocently and just the attempt to get the claim resolved. Great, but we are concerned that there are some out there that are actually acting as a public adjuster. We're aware of the issue.
Yeah, and I think the bottom line is that you can make a bad situation worse if the insurance company does not believe your team, if they don't believe the person who is purporting to represent you as to the value of your loss, that's gonna really hurt you, and where it's it is the reason that there are laws that prevent a public adjuster from also being the builder is to protect you from the situation where the insurance company thinks that the pricing is out of whack and they don't trust the pricing and think that the estimate is self-serving and all that. So I mean, I think we talked about some options for getting out of a contract, going to the Attorney General, if it's a public adjuster, going to the Department of Insurance. But there is a lot of entrepreneurial activity out there in the aftermath of disasters, more than in the past. It's very unfortunate, and, you know, our hearts go out to anyone who's been victimized by a hard sell tactic. I think, you know, you shouldn't beat yourself up if you fell for a really good sales pitch, because it happens all the time. You know, when you're in a vulnerable position and you have been knocked down, and somebody comes along and says, I'm going to solve all your problems, and I've got a magic wand. Basically, I know this game and I'm going to play it for you. It can sound very appealing, you know, but there really often is not an easy way. You know, this is, we call it the road map to recovery, because it's a road. It's not a one-stop deal. And, you know, it's a process that you get through one step at a time. So, you know, if you found yourself in a situation where you fell for a pitch that was phony, you know, and you need help getting out of it, you come to the right place. We've got, you know, lawyers in our directory that will talk to you on the phone for free. We've got volunteers like Scott. We've got our partners, Tracy and our friends at FEMA that are here to, you know, help you get treated fairly and get through the process without extra pain. So I want to thank our special guests, Tracy and Peter, our always very special guest, Tracy Garceau, and our friend Scott DeLuise, your hardworking Colorado coordinator, Carrie Waite, who is always digging for helpful information for you. And then my team at United Policyholders, you know, we're here to help you. We are rooting for you every day. So with that, I hope that you have a pleasant rest of your evening, and we will be shooting out the deck. And please help us spread the word, you know, so that all this rich free resources are being accessed by all the folks who lost their homes in last year's fires. So stay safe and good evening. Signing off.
Thank you.